There we have it. The first tick on the index in the green right now, so 30 points higher on the Nifty.
The indices are absolutely flat, but the good thing is the advanced decline ratio is currently holding up.
Absolutely flat with some negative bias. It's been very range-bound today.
It's flat. I mean, it's basically blinking like a traffic signal, if I can say. You know, red, green, and back in the red again. So that flat. We've not had that flat a day for a while.
We are ending absolutely flat on the indices, the Nifty, the Sensex, the Bank Nifty, and even the mid-cap index. It's as if the market simply didn't move today, but that's far, far from the truth because you have to go down to stocks to see where the action is.
Hello and welcome to Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. These are the top stories, the top headlines for the day. Stock markets end a range-bound session with minor losses. Mid-caps buck the trend and the index ends with marginal gains. The Enforcement Directorate raids Hero Motor Chairman Pawan Munjal's residence in connection with a money laundering case. Searches also conducted at other premises in Delhi and Gurgaon. Hero Motor stock tumbles to its lowest level in a year. CNBC-TV18 learns that Mahindra and Mahindra may be closing in on another fundraise for its electric vehicle business. The company had earlier indicated a fund need of nearly 10,000 crore rupees for the next 2 to 3 years. And nearly 8 years after it was signed, Maruti Suzuki terminates the controversial contract manufacturing agreement with Suzuki in Gujarat, agrees to buy out Suzuki's stake in the factory. The board is yet to decide on how the equity will be acquired and in what form. The stock tumbles 1%. Mixed bag for Motown in July. Commercial vehicle sales come under pressure while exports continue to hurt. Tractor sales improve. Passenger vehicles, especially SUVs, accelerate. And here's a lineup of what we have for you in store today. It's a packed show. In Market Opinion, Tahir Badshah, Chief Investment Officer at Invesco Mutual Fund. In Big Corporate Voices, we have R.C. Bhargav, Chairman at Maruti Suzuki. And let's get to the first headline and the day's trading action. The Sensex and the Nifty end with marginal losses after a range-bound session. Bank stocks decline in trade with the Nifty banking index down about 60 points. Mid-caps managed to buck the trend and the index ends marginally in the green. Prashant is here with all the market action.
Well, an extremely quiet session today. Not very much happening for the bulk of the session. There was a bit of up and down early on. I mean, from market opening to what happened till about 10 o'clock, which was the day's high. There was a drop-off after that, an attempted recovery, but then the market plateaued out all the way till 3:30 with that 15, 20, 25 odd point change. Similar kind of price action of the Bank Nifty as well, very, very quiet. And you need these kind of days after the breathless up move that we've had in our hands for the last many weeks now. Mid-caps and small caps, small change. I mean, mid-caps were flat, small cap index even today ending over 0.5% in the green. IT has been doing well, and the stocks will come up on your screen. That was one reason why the market was not down more. TechM, TCS, Infosys, HCL Tech, LTIM, the large cap IT space doing quite okay. Old economy names like Coal India, NTPC, and auto names like Eicher and Mahindra were other stocks which did well. On the downside, Hero Motor Corp, of course, this was a CNBC-TV18 story. The stock did come off. It recovered from the lows, but lower. Power Grid reacting to results sharply on the downside. And, of course, Apollo Hospitals was the other one. In the broader market, lots of gainers. These railway PSUs, IRFC, RailTel, chemical companies like Navin Fluorine, Anupam Rasayan, financials like IDBI, MFI like Satin Credit Care. Then you had these moves out of nowhere. Delhi Bilcon locked up 20% on the day, and this is incredible volumes as well. Exide Industries, Affle India, Hindustan Copper, Kirloskar Brothers, D-Link, Aether Industries, and so on and so forth. On the downside in the broader market, your names like KEI, Polycab, Finulex Cables, that entire wires and cable space, which has done so well, taking a bit of a breather. Keynes, Trent, Thangamile. Thangamile has been an absolute stunner of a mover, 50-60% in 5-6 days. But it's lost from yesterday's high, which was about 1450. It's pulled back to near 1100 levels. Aptus and DLF for some of the other prominent losers. Well, Nifty's got support at about 19,700. Global cues are important because global markets have been moving up together. Will US markets also see a bit of a breather, or will the up move continue? I think in the very near term, that also becomes important to track. Back to you.
Okay, thank you very much for that. In Market Opinion, Tahir Badshah, Chief Investment Officer at Invesco Mutual Fund, believes The headline index may not see large upgrades, but in sectoral actions, he expects to see more of a run-up in pharma names.
The conditions, at least for a recovery, are probably setting in with the clouds clearing out there, and probably the monsoon also now a lot better than what it was. I think the rural sentiments are probably likely to perk up. If you were to look at headline indices like the Nifty, etc., you might probably not see large upgrades coming around as yet, and it's probably going to be some time. There are some of these large sectors like tech and banks where it is very difficult to probably significantly upgrade numbers at this stage. So I don't really think that will probably be coming. But at this stage, I'm not very sure even that is required. I mean, we are at 19 odd times. It's not a very, very heavy market in terms of valuations being very demanding at this stage. We've seen the domestic side hold up quite okay. There have been certain instances of a couple of products which are benefiting a good number of companies coming in to kick in some extra earnings. So my sense is that there's a relatively underowned space over the last year or two. My sense is that this is a sector which will probably have legs that will probably run a little more than what we've already seen up until now.
Okay, that's the view on pharma. Let's get to the second headline then. The Enforcement Directorate has conducted raids at Hero Motor Chairman Pawan Munjal's residence. This according to sources who say that searches were also conducted at his other premises located in Gurugram and Delhi. Hero Motor Corp shares plunged to the lowest level this year with the stock down close to about 3.2%. Abhimanyu joins in with more details. Abhimanyu?
The Enforcement Directorate has raided the residence of Hero Motor Corp's chairman Pawan Munjal. The case under the Prevention of Money Laundering Act was registered against Munjal after the ED took cognizance of a case filed by the Directorate of Revenue Intelligence. DRI had earlier caught a close associate of Pawan Munjal with undeclared foreign currency at the Delhi airport. There are several other probes which are also pending against the company. In March 2022, the Income Tax Department had conducted searches at 25 premises linked to Hero Motor Corp as part of a tax evasion probe against the world's largest manufacturer of motorcycles and scooters. In June this year, the Corporate Affairs Ministry had sent a notice to Hero Motor Corp for alleged diversion of funds and shell companies.
Okay, thank you very much for that. The third headline for the day, and this is a CNBC-TV18 exclusive. Mahindra and Mahindras electric vehicle business is likely to get another round of fund infusion. Sources say the fund infusion is expected to come from a large Asian fund and could be completed in the next 2 weeks. Sonia is here with the details.
Well, thanks a lot for that. As you rightly pointed out, sources to CNBC-TV18 indicate that Mahindra and Mahindras EV business could get another round of fund infusion. This time, the fund infusion could come in from a large Asian PE fund. And we do understand that this fund infusion could happen within the next 2 weeks itself. Now, we are not so sure about what the quantum of the fund infusion could be, but there are some reports that indicate it could be to the tune of around $1 billion, although we haven't got any confirmation from the management. If you remember, the last fund infusion that happened in the EV business was in July of 2022 when BII, British International Investment, and M&M signed a binding agreement to invest as much as $250 million into Mahindra's EV subsidiary, and this gave it a valuation of $9 billion. Now remember, the Mahindra and Mahindra management has in the past indicated that they are open to raising funds for the electric SUV business because they need investments almost to the tune of, there is a requirement of almost 10,000 crores to grow that EV business in the next 2 to 3 years. So the need of the hour is fund infusion, and we understand that this deal could be closed in the next 2 weeks itself. Of course, we reached out to the M&M management. They refused to give us a comment considering that they are in silent period and their earnings are coming through later this week. Back to you.
Thank you for that. And more stocks in news. Coal India surged 4%. The company's production has increased by 13.4% in the month of July. Offtake is also up 9.3% in the month of July compared to the prior year. Nigel is joining in with the operational update. Nigel.
Well, that's right. Coal India came out with their operational update for July 2023, and it looked quite good. So on the production front, it was up by close to around 13.4%, which looked very impressive. And the offtake as well was up by close to 9.3%. A further look through in the offtake numbers, well, 2 of their units did very, very well. So SCCL, that contributes more than 20% of their mix, well, that grew by more than 24%. On a fairly large size base, when it grows by 24%, that's telling you bulk of that dispatch uptake that we're seeing is because of SCCL. And also WCL on a low pace, Well, out there you had the offtake close to double. It was up by more than 90% on a year-on-year basis. Now, the April to July numbers as well are looking quite good. So the production numbers are up by close to 10.7%, while the offtake is up by more than 6%. And we know that prices have been fairly weak in this year so far. But what could mitigate some part of that is higher amount of supplies to the non-power sector. The supplies year to date, in fact, is up by close to 40%. So the street reads that positively as well. And if we're just looking by the target that they're looking at for this year in terms of production, well, they're targeting close to around 10% in terms of a jump on a year-on-year basis in comparison to 703 million tons odd. And year to date, they're on course for that because the production number is up by more than 10% between April and July 2023.
Okay, thank you very much for that. And in earnings, PVR Inox surged about 0.5% after it reported its Q1 numbers. There was a net loss of 81 crore on the bottom line, but it was better than what the street was anticipating. The poll was estimating a loss of 94 crore rupees. The company has also reported a beat on the top line and margins. Surbhi is here with the key numbers. Surbhi.
Thanks so much for that. So good numbers coming in from PVR Inox. The numbers are better than the poll. The revenues are higher by 3% when you compare to the CNBC-TV18 poll and up 14% sequentially. The margins are higher by 100 basis points when you compare to the poll and up nearly 400 basis points when you compare to the previous quarter. Now, sequentially, the revenues are up 14%. The EBITDA is up nearly 34%. Margins have come in at 27% versus 23% in the previous quarter. The losses have also narrowed. The losses have come in at 82 crores. Operationally also it is a pretty strong quarter. The average ticket price has come in at 246 rupees. The expectations was of 244 rupees. The spends per head, that has also increased substantially. In the previous quarter, the spends per head was 119 rupees. Now it has come in at 130 rupees and the expectations were of 129 rupees. So operationally also pretty strong. The numbers are better than expected.
Okay, thank you for that. And in our earnings corner, we also have Escort, and that stock hit a record high. After reporting strong Q1 numbers, they've reported a 93% jump in the profitability. Margins have also improved to 14%. Sonia is back with the key highlights. Sonia.
Well, thanks a lot for that. It was a very good performance coming in from Escorts Kubota. Revenue growth of almost 15.5% is what the company clocked in. The margins went up 250 basis points year on year, coming in at 14%. And there was a big improvement in the agri segment margins. Agri segment margins went up to 13.3% versus 10.5% year on year. Even the other businesses, whether it's construction equipment or even railway equipment, the businesses improved both on the top line as well as on the EBIT front. And the profits almost doubled for Escorts, coming in at 283 crores.
Okay, thank you for that. Get into a break. We'll come back with the other headlines. Welcome back. You're watching Markets Today with us, and let's get you the fourth headline for the day. Maruti Suzuki was under pressure. Nearly 8 years after it was signed, Maruti Suzuki has terminated the controversial contract manufacturing agreement with parent company Suzuki in Gujarat. So Maruti has agreed to buy out Suzuki's stake in the factory by mutual consent. The board is yet to decide on how the equity will be acquired and in what form. We had a chat with R.C. Bhargav, the executive chairman of Maruti, and he said that it will make sense if the total production comes under one management. He also assured that there will be no change in the capex plan for Maruti. Listen in.
That it would make much more sense if one management controlled the total production of all the cars, all the different technologies, and then looked after all matters relating to production, supply chain, marketing, and sales. Much of it we were doing, but not all of it. So to facilitate that, we decided to change the contract manufacturing agreement and bring that production directly under Maruti. The capex plan doesn't change at all. The costing will not change at all. The production volumes will not change unless in some way we can add a little more capacity to the plant in the SMG. Those are little things which we are doing in all our plants, so that's not an important part of it. How we will buy the shares, as we have said, we have yet to discuss in another board meeting. And we will then discuss the modalities of buying the shares from SMC and do that in a manner which will, as I said, be in the most beneficial manner.
Okay, that's about Maruti. The stock was down 1% in trade, but the big loser today was Power Grid. The stock tumbled 5%. This was post numbers. The company witnessed a 5% decline in net profits, but the EBITDA came in about 3% higher compared to street expectations, resulting in some margin improvement. Vivek is here with the details. Vivek.
Well, absolutely. Going into this particular set of results, the entire power pack, especially Power Grid, saw a significant up move. And today you're seeing a reversal of most of that up move that we've seen in the week gone by. Now, what's actually happened is that, slightly muted set against what consensus was anticipating in terms of the earnings. What's actually happened is that the weak commissioning trends have gone ahead and impacted Q1 quite significantly. Along with that, another thing to note is that the management has declared a bonus share issue. So for every 3 shares you hold in the company, you get 1 additional share. Talking about the numbers themselves, revenues largely flat on a year-on-year basis. That in itself is slightly disappointing given the fact that there was an expectation of a mild uptick at least. The revenues flat at close to 10,430 crore. EBITDA higher on the back of tighter cost controls, up 3.5%. EBITDA margins have gone up by 250 basis points. However, profitability is down almost 6%. And the other important thing to keep an eye out for has been the fact that the consultancy business still a very smaller part as far as the overall revenue segment is concerned, but that's gone down by almost 47%. Revenues there coming in at close to 124 crore. Lastly, the management has said that they would be transferring the telecommunications business to Power Grid Teleservices Limited. So some more details awaited in terms of how exactly are they looking to monetize that particular aspect of the business.
Thank you for that. In more earnings, Obri Realty tumbled 1% after it reported a weak set of Q1 numbers. Net profits down 20% year on year. But for more on the earnings snapshot, Sonal joins in. Sonal?
Well, for Obri Realty, it was a weak set. The residential side of the business is not doing so well, something that we saw in their Q1 operational update as well. Now that we have the P&L, even that is very weak. The revenues have declined in the residential segment, and so have the margins by 500 basis points to 45%. Their rental business saw revenues of 142 crore rupees versus 88.3 crore rupees, and their margins, they were higher at 96.57% versus 94.15%. So their rental business has done better than the other two businesses. The other business is hospitality. That's where they have seen a margin compression come through at 36.6% versus 39%. But of course, residential continues to be the big business, and that is the one which is facing some weakness. And they also saw collections lowering on a YY basis. So that is something which led to the stock price fall today.
Okay, thank you very much for that. Let's move on and talk about KEI Industry in the mid-cap space. It was the earnings, reaction of the day, but on the way down, the stock was down 6% despite reporting a 14% increase in revenues. The chairman and managing director Anil Gupta said that the cable business will see a volume growth of 20%. He also says that he expects the overall margins to come close to 11% on a full year period.
We were a little constrained by capacities. We are building up capacities. I have been saying in my commentaries all through that the market is very strong, the demand is very strong, and it is a bit of delay in building up the capacity, and we are now catching up with the capacity in all our existing plants. This run rate will continue, but I can assure you even the cable business will also grow by around 20% in volume. So we are confident that as we are building up the capacities for cables and the wires, we already have existing substantial capacities. So we should be able to achieve a growth of overall 17% over a period of in this financial year. You know, in the first quarter, because of the higher expenditure on IPL and advertisement, margin is dipped by around 0.5%. So otherwise, we'll see a overall margin of close to 11% over a full year period on a larger turnover.
Okay, the street was disappointed because KEL's performance was not as strong as what we saw with its peer Polycab. And the reason for that, the management explained, is because of capacity constraint. They did not have adequate capacity to meet the increased demand, so which is why its peer Polycab has performed much better and KEI was punished in trade. But moving on, Bosch gained after it reported a 22% jump in profits, but margins came in at 11.3%, lower compared to 12.7% a year ago. Sonia's back with the highlights.
Well, it was a mixed bag coming in for Bosch this time. The revenue growth was strong, better than what the street was estimating at 17.3% year-on-year. The company said that increased sales of exhaust gas temperature components in passenger cars and commercial vehicle segments is what aided sales this time. But the pressure seeped into the margin performance. The margins were down 140 basis points year-on-year, coming in at 11.3%. In fact, if you look at it, the 11.3% margin compares to 12.7% same time last year. But despite that, the profits for Bosch went up about 22.4%. So it was a mixed bag this time around.
Okay, and the fifth headline for the day, auto sales for the month of July were a mixed bag, a bumpy ride for commercial vehicles, but the tractor segment saw an improvement in sales. Passenger cars have seen a strong growth in sales too, particularly led by SUVs. Sonia's again with us. She's had a busy day. Sonia, can you tell us what were the key trends?
Well, thanks a lot for that. So there are 4 large trends that we've seen in this month's numbers, the auto sales. Let me start with the commercial vehicle space, where there's definitely pressure that we're seeing in the sales this time. Both Tata Motors and Eicher Motors have reported a fall in CV sales. Tata Motors CV sales down 4% year-on-year, while Eicher Motors CV sales down 1.8%. The other big trend I notice is that exports continue to be on the weaker side, despite managements like Bajaj Auto saying that things will improve July onwards. So Bajaj Auto reported a steep 18% fall in exports, and that led to an overall 10% degrowth in their numbers. In the third trend, I noticed that the tractor segment has seen an improvement. You mentioned Escort's earnings as well. Escort's earnings have been very strong in the quarter gone by. Even for the numbers for the month of July, domestic sales growth came in at almost 10% for Escorts. The management says that retail demand will pick up in the festive month starting September. In fact, even if you pour through their Q1 numbers, there's been a significant jump in the EBITDA performance and very strong top-line growth for Escorts as well. M&M too reported a domestic tractor volume growth of 11% year-on-year. And the fourth trend is that the passenger vehicle segment, especially the SUV segment, has seen a very strong growth. M&M just reported a passenger vehicle growth of 29% year-on-year, and they clocked in the highest ever SUV domestic sales of 36,200 in a single month. Back to you.
Okay, thank you for that. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.